the fact that Tesla had a quarter one drop in both revenue and earnings in that 9% category, but the stock price went from about 140 to about 165, even on a day when the market was down 400 points because of some issues with Meta. So the question is, why is this and what should we expect going forward from this development? This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. If you're a repeat visitor, welcome back. We also want to thank our Patreon supporters. If you enjoy the show, would like more information on better investing and trading, please join us. Also wanted to note I'm introducing the bald look here finally, and appreciate your assistance in that process. So I've had conversations with several people over the last few days regarding, how is Tesla continuing to rise as the numbers came in lighter than expected? And that's what we want to cover today. Just again, a reminder, please like and subscribe. Help on Patreon, greatly appreciated. So I have to say, just like everybody else, I was shocked. I expect Tesla to be in the 120s by now for a whole host of reasons. We did warn you, though, about this margin issue. So let me deviate just a second and then come back. As you know, oil prices are up right now. Part of it is that Ukraine is blowing up Russian production facilities, and so therefore they're producing less oil, which takes oil off the market and pushes the price up. And the higher the oil price rate, oil represents a very large part of everybody's everything. So it's about 3% of the cost of everything. And as it rises, it affects everything's price. So there are other variables, but the easy culprit we can talk about is oil. So when we talk about oil, think about the fact that, as I said, the price is up and it starts to affect inflation because it permeates its way into so many different industries, if not all of them in some way. So why is this a big deal relative to Tesla? Well, the issue that comes up is there's this thing called lithium ion prices or lithium ion batteries. We talked about the fact that Elon had recommended that anybody worth their salt that was an entrepreneur would make an effort to get into lithium because the price had been spiking dramatically. The unit cost had gone, like in the 2015 category, it was up 4 or 5 times by now 2025. And his expectation was it would dramatically go up because of the number of manufacturers getting into EVs. And so therefore, he felt would be an excellent investment with no slowdown of that price increase. Well, we kind of covered this as one of the potential issues that might affect Tesla's stock price. As you know, we went on a 75% decline in lithium prices. Why is this? Well, it turns out, as you know, that there's a number of manufacturers, for example, GM, Ford, etc., that have a bunch of cars they haven't been able to sell. So, and then you also have technical issues that have been happening at VW. So there's a number of around the globe entities that are having difficulty moving electric vehicles. So what's the big deal with that? Well, the problem is that they want to buy the lithium to use in their cars, but they've had to shut down production or curtail it in order to address issues that they're having software-wise on those entities. So then let's add to the mix the fact that the Chinese economy is in such bad shape and they have had a decline in sales there. Tesla's losing some market share, but the bigger problem is fewer people are buying vehicles because if they don't have jobs, it's hard to buy a vehicle. So where does this leave us? Well, it leaves us in a very interesting position, which is in essence an oversupply of lithium that currently exists. So you're now seeing why I'm sort of tracing the oil around the globe process to get back to where we are with lithium. Well, where we are now is in a position where lithium prices are down, and that is actually beneficial to those manufacturers that need that lithium to make their batteries, Tesla included. So what actually is happening here? Well, the answer is that um, if the most expensive part of your vehicle has a 75% drop in cost, that's going to, I want to say, imply that Tesla is generating better margins. And so let's review the whole discussion of what a PE ratio is. Price earnings. So everyone's quick measure for how to determine whether a stock is well priced is their price earnings ratio. So if your earnings are rising, right, everybody wants to get in those stocks. If your earnings are falling, everybody wants to get out of them. So if your margins or how much you make per vehicle are rising, everybody wants to ride that trend as a way to anticipate being in the stock before it takes off. So one of the quick thumbnail MBA lessons is, hey, if a company revenue is um, is stable to up, but their margins are down, their future trend is negative. On the other hand, if the revenue is somewhat down, right, but the trend on their earnings is up, um, that suggests that they're getting better throughput to their facilities. And if they can expand and maintain that, they can make more money on less vehicles produced. So now let's mix in this discussion of going to uh, the driverless vehicles, and in particular, um, the the biggest issue that pops up is um, uh, text interruption of thought process here. The biggest issue that's going on right now is, wait a second, we thought Tesla was screwed. Elon keeps lowering prices and his revenue is dropping, so both are in a direction that suggests the future is negative. Now let's flip that around. With lithium prices falling, we now have positive direction on earnings for that vehicle. And so I present to you why it's my belief that things are up. So the hedge funds, particularly the shorties, were planning on making a lot of money as the stock price fell. The problem, though, is the long investors, through their analysts, are looking at the numbers saying, hey, there are few places you can go right now to get into a very large company that's doing not great, but doing pretty well, and things seem to be improving. So for Tesla, frankly, it becomes what's called a value stock. The parameters of the numbers on the stock make it actually a pretty good value play when most things in this space are kind of pricey right now. So, I might make a little bit of a comment about Meta. Think about why Meta's stock price, I think it was back up, it was only down 50 the last time I checked, but it opened up the day down like 90 plus dollars. Why? Because of two reasons. Number one, they had decent numbers for the quarter, but the CEO announced that he was planning to spend in order to strongly enter this whole AI boom. And then the question mark is, as he said he was going to spend, he didn't say necessarily invest, which is what he's doing. But what's actually happening here is that if he spends large amounts of money, that can't be part of earnings that you're getting. And as you're building the new AI generated revenue, you have this problem of cash in, not a lot of cash out. So those are earnings slash dividends that can't be paid out because they're being spent slash invested in future growth, and you don't know if that growth is going to happen. As you know, uh, there was an effort for them to go deep into the realm of sort of teaching online, and it failed, cost the company a bunch of money. Stock price fell afterwards, and they still had their core successful business. And so as a result, we ended up with this situation right now where Meta is still a great company, is still strong, but the amount of investing they're doing may clip their earnings slightly. And the market really didn't like that slowdown in growth in earnings. So the general theme of today is it's all about your earnings, Tesla. It's all about your earnings, but it also is all about the growth or decline in percentages. Are your margins solid? So Tesla's margins are expected to fall below 13%, heading for 10. If we're getting better margins because of lower lithium ion, and we bounce up into the 15 to 17% margin zone, there are all these numbers that are anticipatory of that higher margin zone, therefore justifying a higher price for the stock. Let's add on the small vehicle revenue anticipations, and so we now have higher revenue and we end up with higher earnings, both of which are impactful. So we haven't gotten yet to the 3-day rule, but it smells like the 3-day rule will positive for Tesla. I have to say I'm shocked because Tesla stock price at 165 the last time I checked, or just below that, was a big surprise. I expected again back in the 130s or 20s. And given that the market was down 400 points because of Meta news, you know, I just think that we end up with, had the news been positive from Meta, it wouldn't have been a shock to see Tesla in the 170s, possibly the 180s. Hence, this 190 target that I listed out there, I think is there. And I also find this thing a whole fascinating because most of the people who are hedge fund guys were formerly longs, working at mutual funds and other companies, and they've moved over to hedge funds. And it's sort of a different game in terms of how things work. But I do think this is fascinating because usually it's the hedge funds that anticipatorily invest and make money very quickly from investing. And it is kind of fun to watch people who are longs that held on actually make some good money by doing so. Speaking of longs, I wanted to talk with you at the end here about the whole idea of hedging. Now, what I often share on my channel is I think 5 to 10% of your portfolio spent on hedging, if you're expecting the news or don't know what the news is going to do, is a good idea. So one of the math problems you might want to consider is, wait a second, I have $1 million portfolio. If I did 5%, let's say it's $50,000 worth of puts on Tesla. Well, what might have happened is the stock price could have fallen to 120. You make money on the puts, but you still are going to keep your calls because you're a long-term holder of Tesla. Plus, if you sell, that tax bite is so brutal that you didn't want to do that. You will take a tax bite on making money on the options, but very different than holding for long-term capital gains on your stock. So what likely happened if you followed my hedging suggestion here is that, think about it. If you're a large holder of shares and you hedge, let's say the 5%, the first 5 to 7 points of the increase in value of Tesla covered the cost of the insurance or short that you did. Now the rest of that is profit that you're getting, including now, and you could comfortably sleep through that knowing that you kind of stay not totally even, but either way, you're doing fine. So I think, learning about hedging, learning how to use it, using it at strategic moments, if not definitely on Tesla, but could be other holdings you have as well, is definitely something to consider and try out. So, at any rate, thanks once again for joining us. This is Greg for Teslafaninsight. Sad to see this whole discussion of the pedal and the Cybertruck not working that great. I'm really hopeful, praying that we're going to see a nice push in numbers from them, but I think the camper and some of the other things they're doing will start to shape how much demand there is for that vehicle, especially also if we start seeing, some nice looking vehicles that have wraps and so forth that make the car look less space age and crazy and more on the normal side, as well as creative ways that owners are starting to use them that are appealing to other owners who have other choices they might have made. So, at any rate, want to thank you for taking time out on our comments there. Now, let's get back to our health tips. Now, I'm sort of really bound and determined on this whole issue of kidney management. As you know, it was recommended by one of our kidney docs that you have at least 3 days a week where you do not eat any meat. So my secret weapon for trying to get to that is buying those pre-made salads with a bunch of different things in the bag. Really like them. It's helping in terms of my eating process. I'm actually going to have one as soon as this show is done. But again, the recommendation was that I thought that kidney and heart and all those body parts would just get stronger with use. But by reducing or eliminating the meat eating for a few days a week, it gives the kidneys a rest so that they can do their jobs on the other days, and you're not trying to prematurely tire them out. So just want to encourage you to consider that, and also ask your health professional when you do your annual about that as well. Definitely doing the 25 leg lifts per leg as well. The rest of our health tips are below. If your health professional would like to share us some ideas in this frame, please do. Anyway, this is Greg for Teslafaninsight. Tjus av våra hittar hoda hefestra siche ni hao ma. Arrivederci. And namaste. And in Jamaica we say enough respect, walk good man. Thanks for joining us. Have a great day, and bye for now.